market is really ugly. So I'm taking a look at this this tweet that came across. S&P 500 is down 13.3% in the first 82 trading days. It's the third worst start to the year in history. So only 1932 and 1939 started off worse, but they eventually recovered but finished the year down. We don't know where we're going to be here. Right here in 1942, 1970, they actually rebounded in the next 83 days and ended somewhat up here in 1942. It was flat in 1970. So pretty ominous. Where do we think it's going? So here's the daily chart of the S&P 500. Maybe a little sloppy head and shoulders pattern here. If this were to be the head and shoulders formation, you would think that the distance from the head to the neckline would be the amount to drop. So that would get us down to around 38.20 to maybe 38.50. Also, if you take a look at the Fibonacci's from the lows that we hit in 2020 up to the peak, we're getting it's the 61.8% retracement down here at 38.20, 38.50. So this could be a reasonable level of support if we're going to continue to fall. If you take a look at the weekly, same thing here with the Fibonacci, right? So the Fibonacci's from the low. This 38.20 level would represent about a 38.2% retracement from the lows hit in 20 to the peak. Little bright spots here is that we're super oversold here on the RSI. Well, this is the 5-week RSI. On the 14-week RSI, we still will have a little bit more downside here left. And on the monthly, I guess the saving grace here is that we're kind of sitting right here on, this is the 20-month moving average. So you could say pretty ugly start to the year. We'll see where we end up. All right, let's talk about how we did trade-wise. So Trade Metrics did 68 total trades for the month. Our P&L was $58,920. That's what we made. We put at risk $439,750, so that's about a 13.4% return. We had 55 profitable trades, 13 unprofitable trades, so it's a really nice ratio here. Percent profitable is 81% versus 19% unprofitable. And here's the total profits, 126,000. Here's our total losses, about 67,000. Our profit ratio, which is our gains over our losses, is 1.9, so a 2-to-1 ratio. That's decent. If you take the reciprocal of that, you only have to be right 51% of the time to make money. Ideally, I'm gonna try to get that up to 3. 3-to-1. Our maximum profit, our maximum loss. This max loss here, this is a mistake on my part. I had a bull put spread, I believe, on Amazon and going into earnings, and it just went the other way. Amazon really dropped like a stone after earnings, and I tried to minimize my loss and I tried to get out, but those options were flying everywhere. I ended up getting a really bad fill. I took a bigger loss than I should have. If I just would have waited near the market close and just did a market order, I would have saved myself about $2,500 or so. So yeah, this max loss is skewed by one bad trade. It happens. Got to be careful next time. My average return per trade, my average risk per trade. Try not to go above like maybe 1 or 2% of your portfolio value if you're going to apply it to a single trade. That's at least my rule of thumb. And then our average holding period for the month of April was about 7 days. So all in all, pretty successful given the state of the market. So you can see here for the month of April, the SPYs, which it's the ETF that represents the S&P 500, that was down 5.6%. The Qs, which I think is the Nasdaq 100, that was down 9.6% for the month. It's a pretty big drop. And then IWM is the Russell Small Cap ETF, and that was down about 7.6%. You can see our gain here was 13.4, based upon the money that we had at risk. Profit analysis, we're trying to keep it even keel. I did have a downward bias for the month, but I'm trying to balance it out now. You can see the current positioning here. I have 46% downward bias, 43% upward bias, and about 11% of the portfolio in neutral status, meaning up or down. I'm thinking that, as we get closer, at some point in time, this market's going to have to at least rebound from an oversold situation. It might be temporary. I don't know if we're going to be racing off to new highs, but at the very least, there should be a bounce coming in. So I'm transitioning more towards an upward bias as we head into May. Anyway, so the profit analysis here. So our long puts made the most money, $69,000, and then our bear call spreads also made some money. Made a little bit of money buying calls, which is really pretty amazing considering the shape of the market. Made a little bit of money with the straddle, and then anything, these bull spreads here, the verticals and the bull put spreads, they did not work in my favor. Again, this number here is a little bit bigger than it needs to be. The loss I took on Amazon represents about almost half of this. So one bad trade kind of wrecked it for me. But we'll rebound. We'll bounce back. So by strategy, 27% of my trades were long puts, 25% were bull put spreads, and then 32% were bear call spreads. And then have 6% bull call verticals, 6% straddle, and then 4% long calls. And here's the current position. So all in all, pretty good month, given the state of where the market is, and we'll be watching. One thing I want to talk about here just quickly is the VIX. So the VIX is going into backwardation again. So the spots trading above the future, which is usually a good indication of a near-term market bottom. Here's the rate of change, broke above that 50 level, that 50% move. That's the 5-day rate of change. And then this put-call ratio is all the way up here to 1.3. So really, the sentiment here is very negative, and it would indicate to me that at the very least, there could be a bounce here, maybe coming up in May. We could see a little bit of a recovery here in the market. So we just keep that in mind as we position ourselves. All right. Good luck. Good trading.